2, 1. And we're back. Another episode of Stay in Your Lane. My name is Namir Ad-Durra. This is my co-host, my man,
Layth Al-Bazargan,
the technical guru,
trying to make it.
the guy that keeps this thing going. Today is a very interesting day because we're going to go down a road that's, less traveled, less known for a lot of people. And that is the road of cryptos, blockchains. And we have a very good friend, very smart gentleman, Mr. Faisal Shlash. Hi, Faisal.
Hi, Namir. Hi, Layth. Thanks for having me in your podcast.
Nice to see you,
Our
bro.
pleasure, man.
It's been
Very
a while.
nice to see you, man.
Likewise. I know, man.
So today we're really excited, man. We're super pumped up. We've mentioned cryptos before on a few of our other episodes, but I think having someone with your experience, your expertise is going to be really interesting. I think can spread some interesting knowledge and some facts about what it is, how it works. But before we get into that, I think you're part of a very interesting project here in the UAE. So it'd be really cool to kind of get a little bit of understanding on what you're doing and who you're involved with.
Yes, well, I'm currently working with a crypto team in Dubai. The company is called iOWN Group, and they run the iOWN token, which is basically a token where you can use and fund businesses and startups, pretty much like crowdfunding. So there's different types of crowdfunding. There's reward-based, so you're into this new camera, let's say, and the designer or the manufacturer doesn't have the fund to start it yet. So what he does is, starts a crowdfunding campaign. And once he reaches the amount he's trying to raise, he'll build these cameras and, send them out to the believers, the people who funded his campaign,
Now,
pretty much.
it kind of sounds like a Kickstarter kind of thing, right?
That's reward-based. What we're doing is equity-based.
Okay.
So it could be anywhere from real estate to restaurants, you name it. Even with real estate, let's say you own an apartment for $1 million, but you literally need $200,000 now. You just need money now, so you can actually, put it run a campaign to raise the 200, and let's say 20 people raised, the 200K.
Yeah.
They'll have shares in that class.
It's done like that. Share division or inclusion is done using blockchain technology, and that's the difference. Like, is that how it works?
Yes. Blockchain is way faster and way more secure, especially when there's a lot of money involved. If somebody pledges 100K, so that's a lot of money. Websites can be hacked. So with blockchain, things are tamper-proof and unhackable in that sense. So it gives you a bit of security in that sense.
Okay, because it's interesting. I think most people now, when they look at the exposure around cryptos, everyone just knows or hears of Bitcoin, Ethereum, Ripple.
Yeah.
This is, I think, most people's experiences is that they just hear about this currency. I think a good
the mainstream ones.
Exactly. I think a good starting point is maybe if you could just kind of give a little bit of understanding of how it works or what makes it so different in terms of the blockchain element or how that world operates, if you don't mind.
Yeah, well, sure. I mean, let's start with blockchain itself. So let's imagine if this is a block, a single block. If I send Layth or Namir, let's say at 1 Bitcoin, it needs to go through miners and be recorded on a ledger, right? So once that's done, this transaction ledger will be stored here. So imagine 1 drop equals 1 transaction.
Yeah.
Let's use Ethereum as an example. So same thing I said, but they can always add smart contracts on top of on the Ethereum blockchain. So once this block is fully mined, it releases a certain amount of Ethereum or Bitcoin, and then we move on to the next block, and so on and so forth. You probably heard about the Bitcoin halving, by any chance?
Yes. So what is it? 210,000 blocks? Is that how it works?
Yeah, roughly. Yeah, it sometimes it changes, but let's take it with years. So like currently it's on every 4-year cycle. What happens? So currently we're mining 6.5 Bitcoins per block. So once a block is mined, the release is mined. Yeah, it's released around 6.5 Bitcoins. A week before I was releasing 12 Bitcoins. So you realize the supply is getting shorter and shorter. Same with Ethereum as well. So blockchain in general, it's a ledger. Pretty much, it's a distributed ledger. Reason why people can't hack it because the ledger is stored on millions of computers. So you literally need millions of people in the same time, in the same second, to hack a block. Because if one block is, somebody's trying to tamper with a certain block, the rest of the blocks will disagree and say, sorry, this information isn't correct. So
and they'll cut them off.
Pretty much unhackable.
I heard that in order to do any sort of tampering or hacking, you'd need to have something like 50% of
51%.
Exactly.
That's what
majority of it, right? In order to be able to tamper it. So, which is nearly impossible at this point. But you mentioned, look, there's so many questions, right? And guys, I'm sorry if the flow and my brain works in a very awkward way, so I'm gonna just kind of throw questions as they come in. When you mentioned Ethereum, you touched on, or you mentioned a specific point, which is the smart contracts on top of the transaction itself. Now, what is a smart contract? Just for people to understand that.
So the difference between Bitcoin and Ethereum is massive. I mean, I always tell people if they were born on the same day, Bitcoin and Ethereum was released or launched on the same day, Ethereum will be way ahead of Bitcoin. For the core reason of you can do things with Ethereum. You can build tokens on top of them, different ideas, contracts, and you can use it with every single industry you can imagine. So with smart contracts, let's take a small example. Let's say healthcare. Somebody in Australia is sick and requires a surgery, but at the moment in Australia, nobody can actually do the surgery. So he has all his medical files stored with the doctors. So he'll have to take it and then go to Germany to do that surgery. So smart contracts, it gives you that security in a private key and a public key. So you can give access to the doctors globally to look at your case. Because if you go to a private doctor, he doesn't want to share that information. He's already, spent hours researching and doing all this, and then you got your medical report there. He's like, he's not going to share it, maybe. But this gives you the rights to access. You choose who can access something or not. Another good example is organic food. You can go to an organic store, but how would you know 100% if this apple is organic or not? So there's a smart contract put in place where the whole, let's say, supply chain is connected. So basically, from the farmer, he puts a sticker, a barcode, let's say, on a QR code on all the oranges and everything. Then they're shipped to another country. Then they're stored in a fridge for maybe 2 days. Then they're distributed to supermarkets. Through an app and through smart contract, you'll know exactly where this product has been and how long it took, and where the final retail place is, where you can actually find this orange.
So basically you can trace back the history.
Exactly, the whole logistics, even which airlines it's been on, or has been shipped through whatever,
And so, is it like, because I'm again, just to try to look at the advantages of it, like one of the cool things that I've understood from it is that it's public, right? You're anonymously out there, and there's many layers of checks, so everyone sees everything. And I guess that's is that correct? Like, is that a correct?
I mean, with blockchain, no, it could be used anonymously or not. I mean, banks use blockchain now, and they know who you are, they know your full name, your address, and everything. But they use the technology because it's secure and it's faster. So they only use blockchain for that, but it could be used to be anonymous. A lot of people get it confused. As in blockchain, it could be illegal, or it's
it's one of the concerns, right? I think it's one of the concerns. At least I think that the traditional banking system obviously has incentives to fearmonger around blockchain, around cryptos, because ultimately I feel as though, and maybe again you can correct me if I'm wrong, but I think one of their concerns is that it's not meant to be regulated. It cannot be regulated. It's kind of counterintuitive to have it regulated. Is that correct?
It can be regulated, blockchain. I mean, anybody, if you have the resources, you can build your own blockchain. So there's banks using it.
Visa just announced that they have their own digital currency, which I'm assuming is some sort of blockchain.
Yeah, they have to, because the reason why is Visa can handle 24,000 transactions per second. So when you come to the crypto sphere, you've got EOS, many other cryptos that can run 100,000. Even the target is to reach 1 million by end of the year, 1 million transactions per second.
Wow.
Visa's ahead in the game when it comes to the competition between MasterCard and Visa.
Yeah.
But 24,000 is not enough these days because you've got the blockchain, which is really high speed and really secure. So Ripple is centralized; it's not decentralized. A lot of people get that confused as well.
Okay, that's what I was gonna.
Banks use Ripple.
Yeah, I was gonna ask that because that's the way that I understood Ripple. Is that Ripple is different from the rest of the cryptos in that it's more of a systematic or more relatable to the banks. It's controllable. It's a closed space in terms of where their currency operates.
Yeah, and nobody's really anonymous. Even when you come to Ethereum, really, if I know your address, if I want to send you 2 Ethereums, you'll have to send me your address. I can go to etherscan.com and put the address and see how many transactions have you done and how much you carry. So it's not really anonymous in that sense. Monero is probably one of the only cryptos that are fully anonymous and secure.
Interesting.
So privacy too.
Really, I didn't realize that because I think that was one of the things that they kept mentioning, and I guess that's some of the misconceptions that are out there. So it isn't.
Yeah.
So people can see how much Ethereum that I hold. So I have, for example, now a wallet, but I have an external wallet, right? So it's a ledger. It's like a USB. So I use Coinbase to do my transactions. Then I take it off
on the cold storage.
Yeah, and then I go and I put it exactly on that, and then I store that away. Can people see how much transactions I've done? I know that Coinbase actually keeps a ledger of my transactions and what I've taken out and put into my wallet, but is that public information?
Yes, it is, but there's no name attached to it, right? So, with Coinbase, they probably know because you've done your KYC, so they know who you are.
Exactly.
But but if you send me tokens, you'll need my address, and you can copy paste it, put it on Etherscan, and see how many transactions you can do. But then you can, you can get people confused. You can switch it to another wallet, then another wallet, and people, because there's no name attached to it, it's just numbers and letters. So you don't know. At the end of the day, you don't know how much Namir has exactly, because you can actually switch it in 5 minutes to another wallet, right?
Interesting.
And there's different wallets that change addresses every 5 minutes. So
look, I'm quite intrigued to see what your perspective is. Do you think? I know it's a long shot, and I don't expect you to be absolutely correct. We'll probably look back at this video and hold you accountable, but we'll deal with that road in the future.
No
but do you feel as though the future is some form of blockchain or crypto, and that fiat currency or currency as we know it today, it will be non-existent? Or you think there's a place where they can coexist? Like, how do you envision it in the future?
I envision, actually, it's happening now. Everything's happening around us now. I am optimistic. Yes, it is a revolution. A lot of big sharks and whales will be upset because they're kind of late to the game in that sense. Nobody's late, but people with huge financial backups should have joined earlier. That's where the markup is, where you make profit. It's utilized now. I have a cryptocurrency credit card by Visa, so I can go out to any supermarket and spend my Bitcoins and Ethereum or whatever coins I choose.
But how does that work with all the fluctuations that are happening within Bitcoin specifically?
You live with it, I guess, like foreign currency, right? It's just it's like you have a dollar account and you do a transaction in an unpinned. So for example, here today we're pinned on the dollar in the UAE. But for example, if you go to somewhere that isn't Pakistan or there, you're floating. Yeah. So if you have a dollar account,
or Kuwait, isn't Kuwait a money basket?
Yeah, exactly. Kuwait is another example.
Yeah.
So
interesting.
Yeah. Okay. So
you can use it.
Go ahead. Let
me sorry to interrupt, but to utilize it, you can. See differences. I'll come to the differences between tokens and coins. But let's stick to coins now. You can spend it anywhere, literally, and it's Visa. It's by Visa, anyways.
Yeah.
So there's crypto.com, MCO. They have a credit card. 10x. I got that 3 years ago. It stopped working in this region, but when I travel, I can use it. And the way it's done, it's connected to an app. So you'll know if you want to spend it, use the card today or not. So let's say Bitcoin went up 20% this week. I'll use it, but if it's done, I'm not going to use Bitcoin specifically. I'll use Litecoin or something else. So you can control what currency you use.
So each credit card is a specific crypto, or is it like
when you're doing a bunch of currencies? So you list it.
Okay, so when you're doing the transaction, you say, okay, I would like to use the Litecoin this time. I would like to use the
or leave it on auto, and we'll select the best currency to use now
at the point of sale.
Yeah, exactly. Yeah,
interesting.
Wow, I didn't know that. Okay,
do you want to know more?
Yeah, please. I'm like, this is cool.
You can buy an apartment here with Bitcoin legally.
Really?
Yeah. I mean, New Zealand, I'll tell you about New Zealand. It's the first country in the world that you're legally allowed to pay your employees with cryptocurrencies. And it's taxed. It's fine. I mean, fully legal.
Okay.
So if I own a barbershop and have staff, I can pay them with Bitcoin if I choose to, legally.
Shout out to our Kiwi friends. Faisal, you're Kiwi, aren't you?
New
right?
Zealand.
You're part of that. The little brother of the Aussies. I know that's a little offensive, isn't it?
Yeah.
I had to.
But we're better than at rugby and everything.
Okay. Guys, all the Aussies, hopefully we have a few Aussies watching it, man. You can, make your comments, explain why you think you're better than the Kiwis. But right now, we got to show some love to the Kiwis.
New Zealand's winning, man. We're winning. Yeah. So, you can use it. Anything. Booking hotels. Booking hotels. There's different websites who are crypto-based and blockchain-based where you can book, your holidays with crypto. So there's no shortage of that to utilize these coins. You can either use it like gold or silver, it's like a financial investment in stocks, or you can actually utilize it. So it's a win-win, really, Yeah.
Wow. Because look, for me, it's just like when I invested in Ethereum, to be honest, I never bought into Bitcoin. I see Bitcoin. My issue with Bitcoin is I see it like gold.
I agree. I was going to say that.
Yeah, I don't see it as a transactional future thing. I think it's just a store of value, an asset. It's an asset.
Yeah, 100% right.
Ethereum, from my understanding, my very humbled and simple understanding, seems to be something that, as you said, with the smart contracts, although I don't really understand it, and with the 2.0 version coming out now as well, and all these improvements, and I've heard that it's much more efficient even in transactions. Like it does it in split seconds or in a lower amount of time than
it's
the Bitcoin
scalable as well. Yeah.
And it's scalable.
I mean, smart contract, I'll make it easier. It's an if and then. So if I receive that, then you receive that. So it's a simple equation, a smart contract. It's if I receive this apple, you will get $2, or it's like Amazon deliveries, So if I receive this, then Amazon will get paid.
But there's no way to screw. There's no way to screw that. And if I receive and I don't want to give. You can't.
Even if you receive, then you lie to Amazon. Dude, I didn't receive. I mean, it doesn't work. So it's going to be, you need to scan, like my side, I will have to scan. So blockchain is informed. Yeah, this guy received it because I have the private keys. Nobody can hack it. So it has to be me who's done this.
Okay.
So now with fake signatures, like my neighbors will receive an Amazon, let's say, a package, and they will sign it off. I mean, nobody cares. Nobody get back to Amazon. It's like, dude, you received. So with blockchain, there's no way this could happen. Now, forget about Amazon. Think about the $1 million products, trades, and logistics. It's every industry, literally.
It's really
blockchain works with it.
Because I don't know where I heard this. I have no idea if it's accurate, but I heard like right now today, the most efficient way to send money is to actually put it on a plane and send it physically to a bank.
If you can.
But like, if you think about it, it makes sense, right? When you do a transfer online, unless it's a transfer to a bank that's from the same, a bank to bank, like you're HSBC, I'm HSBC, and it goes through. But in most cases, it takes like what, a week, 3, 4, 5 working days. So it is maybe. So I think that's one of the advantages of the crypto is the fact that it's just like, boom. It just happens, right?
Yeah, it's instant. It's instant and it's really cheap. I mean, if I have to send money to my New Zealand bank account, they will take around, $13 to $15 US dollars just for the transfer. Even if it's $100 or $1,000, I think, it's a fixed amount. will take 3 to 4 working days, so including weekends. It takes forever.
Sorry,
I can do it in a split second.
This might sound like a stupid question, but in that scenario, who's making money off that transaction? Is it Ethereum or is it the person that's doing the transaction for you?
The miners.
Miners. Good question. Yeah.
Miners.
Let's talk about mining.
Yeah. All right, interesting. So now explain mining. Like you lend space of your server to create or process transactions, and you get rewarded for it. Is that a?
Yeah, kind of. Yeah. Initially I got into mining before knowing much about cryptocurrencies. I thought I needed to learn the technical side before understanding, the economics and the finance side of things. So I got into mining 3.5 years ago, specifically Ethereum. Like you said, Bitcoin is just, I think it's kind of useless in that sense, just like gold.
Yeah,
store value. It's too slow. Yeah, it takes 10 to 12 minutes to send you Bitcoin. And the cost is high to send it. It could cost up to $10 as well to send Bitcoin.
Interesting.
So if you want to send 20, they'll actually deduct 10 out of me. I'll explain why later. So that's where mining came into it. So I got into mining. They're pretty much graphic cards, gaming graphic cards like NVIDIA or AMD. And you download the software and you mine. So I was like, okay, let me do it. So what happens is, like I said, if I want to send Amir 2 Ethereums, it needs to go and be ledgered pretty much, on a distributed ledger. So it goes through miners, and the miner receives it. It's all automatically done per second. It's really quick. So you receive a job. Okay, ledger, this address is sending to this address, save, move on to the next transaction. And you get a tiny, tiny amount of Ethereum for every transaction you do. So the reason why is it's called proof of work. So I'm actually working and spending money, electricity. I had to buy these mining rigs, machines, set them up. And electricity is really expensive. I mean, it does drain electricity. So hence, here's your reward. Thank you for, validating my transaction. I'll get 0.0001 Ethereum. It used to be profitable, really profitable back in the day, but algorithms, they get more difficult. That's more, how the ecosystem is.
Yeah, more energy, more, and that's again for all the environmentalists out there. I think that's one of the concerns and one of the questions around this crypto space and this blockchain space is it really as harmful? Because I think that's one of the negatives that's put out there. I don't know how accurate it is, but the amount of energy used to process all of these transactions, is it sustainable?
It's actually like 6% of how much electricity it takes to print money, run banks. If you think of it that way.
That's a very good statistic.
It's a good angle.
Yeah, that's a very good statistic. There you go. 6% only. So there goes that environmentalist argument. All right.
Not only that, it's COVID friendly.
It's cool.
Exactly. So yeah, it has nothing to really do with the environment. But I mean, if people are interested in mining, I recommend, if you have access to free electricity, or you use solar panels, or whatever, windmills, I don't know what they call them, but then it's worth it. I was lucky we had, for a good year, we had free electricity. Don't ask me how. We managed to get it legally. And so we did well with mining, at that time. And I think, I switched off the machines later when the price went down. So when I got into mining, it was $77 in Ethereum. 6 months later, it went up to 1,350.
I remember that. That was what, 2017, right? When it went.
So I started around June 2017 mining. January 13th was the peak, I think, of 2018.
Of 2000, exactly.
1,350. Yeah.
Exactly.
So the ROI was literally in a month. I mean, I got money back for the 4 machines, and we kept it running.
And I think we touched on it prior to us getting on the call, but I was reading, and I had mentioned it, I think in one of the podcasts previously, about staking, how Ethereum 2.0 is kind of evolving into this new way of producing or loaning. Can you explain that? Like, explain that shift? I know it's coming soon, isn't it? It's they're talking within the year.
Yeah, I mean, they're saying probably around end of July. Nothing out officially, but it's just leaks. And so basically, currently with Ethereum, it's doing good, but people are complaining it could be a bit slow. It's kind of limited in certain things. So, and they want to avoid the whole mining issue because people are, they're into phases. So, let's mine now, and then they decide to stop, and then other people are mining. So we can't have all the miners consistently, working together at this moment. So mining is proof of work. What we're moving to, Ethereum's planning to move to, is proof of stake. POS stake. So it's basically the same thing, validating transactions, but only certain people can do it. So you need to hold a certain amount of tokens. The minimum is minimum amount of Ethereum. So the minimum amount is 32 Ethereum. You'll have it on a wallet. You need to eventually download the software or something. And you get interest in return. So
that's what it was.
Talking about the first 3 months,
Yeah, they were talking about it, and they're saying something in the range of 6 to 10% interest on is what they're projecting initially.
Yeah, I reckon it will be higher initially, the first 3-4 months, because there won't be many people on board initially. Like, they won't know about it. Even if you're into Ethereum, but look into it once every month, you might not know. So it's always, the hardcore fans will be into it, which will be a limited amount of people. So they're expecting up to 20% initially the first 3-4 months. Wow. And then the more people get on board, of course, you need to share the wealth now. And the percent will go down. But I think the promised amount is between 3 to 5% in the long term. I mean, worst case scenario is 3 to 5. Best case scenario will be around 10.
Now, I've seen a couple of arguments about this, but one of the concerns around the staking concept is that it may create a division of wealth, right? So the people that have the most can stake the most, and in return gain the most, and that could potentially fuel a cycle where it's unequally distributed. Do you think that is understanding it obviously in a much more complex way than I do in my simple mind? What do you think? Like, do you think that is a potential?
No, I disagree, because same with mining. China has the highest mining power globally, around 52% of the mining power, or the hash rates globally. So you can apply the same thing with here. Maybe China will have 51% of the Ethereum staked. So it won't change much. If anything, get on board earlier. The price of Ethereum will definitely go up because it's staked. There's less Ethereum circulating, right? So get into it now. It's around $200 roughly.
I just bought recently. I just upped my stake, but I'm holding it's a very small part of my investment portfolio. I think I have altogether maybe 10 Ethereums now, something like that. So I'm not holding huge.
Is that the only cryptocurrency you're holding?
It's the only, that, and I do hold Ripple, but I hold Ripple on an exchange, so I don't physically own the Ripple. I own it through eToro, so so that's another thing that people need to understand. There's two ways to own cryptos, and sometimes people get confused, right? So there's a physical way, so when you have a wallet, and you physically own that, so that's really yours, or you're participating in an exchange where you're basically going into an agreement with that platform, in this case eToro, and you agree on a price of a buying price, and they promise you that when you come to sell, they'll give you the market price at that moment, but you're physically not owning it.
That's historically more risky.
If they collapse, you're putting your trust
in them,
in
the broker.
In the broker or in the entity to actually deal with it. And there have been cases of collapses. I went to eToro. I'd heard really good things about them, so I did that. I hold quite a bit of Ripple actually. I still feel as though that at that time made a lot of sense to me. What do you think, Andy? I think it has a lot of potential. I think it's completely undervalued. I bought Ripple again recently because it's at 20 cents now, and I suspect it'll be at least $3 or $4 at some point. So I don't know. What's your feeling about it?
Not the biggest fan.
Oh no!
Many reasons.
Tell me. Give me the reason. Might as well tell me.
Literally, the only crypto I'm not a big fan. I don't hate cryptos, any cryptos, but literally that's the only one I don't get close to. Many reasons. First of all, it's the opposite of the concept or Satoshi's vision, you could say. They're centralized. I mean, they've solved many issues. In terms of Standard Chartered use them, a few banks use them for exotic currencies if you want to transfer between them. Also to transfer money overseas. I mean, they use blockchain and Ripple to fuel it in that sense. So you need Ripple to send money. So how much Ripple do you need? Nobody's going to pay over $1. I mean, there's no point of Ripple. I mean, if you use Ripple, you don't want it to go up as a bank. Because let's say it requires 1 Ripple to send this transaction, all right?
Yeah.
Because it's at 60 cents, let's say.
Yeah.
Why would a bank want to spend $5 to send this transaction? I mean, the use case of Ripple, you don't want it to go up. Banks or people shouldn't be happy that it goes up. People who use it. But if you want to make a quick buck out of it, yes, it could go up, but how much could it go up? I mean, the threshold is literally, I think, what is it, $5 max. It'll never go above,
You've just shattered.
The rest of the sky's the limit.
You've just shattered all my visions of sitting on a beach, enjoying, my retirement off of my Ripple investment. Thank you very much, Faisal.
Your private helicopter.
Yeah, exactly.
I always had private helicopter. People laugh at me. I don't know why.
Yeah. Well,
maybe one day.
To be honest, after the Kobe incident, I don't know, man. Yeah. God rest his soul. Yeah. I don't know how I feel about helicopters now.
I actually thought about it. Yeah, helicopter. I'll stick to yachts. Man.
Yeah, exactly. So, I'll take my chances with the sharks. I'll take my chances with the sharks. Is better. Yeah. But yeah, thanks for ruining that for me. I really appreciate that very much.
Man, so. Just ask and like join communities. Like you're not born knowing this stuff. So it's the more you research, right? So I advise people to get into communities. Telegram is the best.
What are some of the communities or forums you think people should subscribe to or follow, or
if they're interested in this?
They're interested. Like I'm somebody like me. I've tried to do some research, and I get to a point where I'm like, okay, I can't. This is way above my head, because it's not easy. Like it's not practical for somebody to just enter it and figure it out.
No.
When you explain it now I'm hearing a lot of insight. I'm understanding more of what things I should look for, but it's not intuitive enough for somebody to pick it up right away.
Very true.
Sure, it's not easy, and there's a lot of terminologies as well. I mean, first thing you do is probably just learn a few terminologies. There's a lot of websites for it. Yeah. The way I started this, I went to coinmarketcap.com. So it's a good website. It's like the encyclopedia for cryptos, pretty much, and it's got the live prices and everything.
Coinmarket.com.
No, CoinMarketCap. CAP.
CoinMarketCap.com.
Yeah, or CoinGecko.com.
Check it out, guys. Check it out.
Guys.
Get some information there. Okay.
Yeah. So the way I did it was, I was like, I'm gonna learn about 2 cryptos on a daily basis. So it takes me 15 minutes. I did it for a whole year, So literally, I won't skip a day. If I skip a day, I'll learn about 4, the day after to make up for the day I missed. So because for me, it was just a virtual coin. Simply when I first started, I mean, okay, do I trust it? I don't. But then whenever you go, so I'll select coin rank number 8, whatever it is. Yeah. I'll click on it and see what use cases. Why do I need this? How is it different than Bitcoin? How is it different than anything else?
Yeah.
And and is there a demand for such a coin or a token? I mean, so you always look into. There's in the music industry, you can buy tokens to listen to music, or maybe listen to that song before the rest of the people. So there's many reasons. Each coin or a token has a utility.
Okay.
So with my learning, I was like, okay, maybe this business it looks like it's going to grow in the future because of demand or supply, or how the medical industry is heading towards or banking. I was like, maybe in 5 years, I think people start utilizing this. So let me be an early investor and buy it on a cheap. You really need to believe in it to invest.
You just brought up a point, and this is, I think, part of the terminology that confuses myself, and I think confuses a lot of people, which is you just want to bucket everything into a currency or into, a cryptocurrency. But you keep mentioning token, and I'm assuming you're saying that because it has a different value, and that's the separation of a coin or a currency versus the use of blockchain technology to provide some sort of transaction advantage or whatever. Is that a correct kind of
I'll
separation?
explain the difference. Yeah.
Please.
Kind of. I mean, yeah. So their tokens and coins are both cryptocurrencies. All right. So let's take Ethereum as an example.
Yeah. A good Canadian, by the way. I got it. Since you've done that now, we're gonna have to say power to the Canadians. By the way, if you guys if you don't know, both me and Lays are Canadians, and Vitalik Buterin, is that his name? Vitalik Buterin, correct? Yeah. He went to Waterloo University before dropping out, and I went to Wilfrid Laurier, which is just up the street in Kitchener, Ontario. Great place, great school, great minds.
Willow.
You know what I mean?
Shout out to Willow.
It produced a master, and I had to bring it up again.
Here we go again.
So I had to bring it up again. So just want to say hi to all my Canadian friends. But go for it. So
he's a genius. I think he joined the university at 15 or something.
Yeah, he is.
Next level. He's a genius.
Next level. I interrupted you. Sorry. So please go ahead.
Worries. Yeah. So I mean, we'll take as a use case. Let's take Ethereum. So Ethereum is a coin, not a token. Its utility is like money. You can spend it and then everything. And it has several other utilities where I bring tokens. So the difference is tokens are built on top of the Ethereum blockchain. So we're kind of renting their server. Tokens are, so they pay Ethereum. They have a smart contract that their token has ABC function. All right. So this token will be used to pay electricity bills, for example. They will then write the smart contract and put it on the Ethereum blockchain. So when they design their platforms and tokens, there's certain languages. Solidity, there's different Ethereum languages. So it's not C++ or JavaScript. Ethereum has their own programming languages. So the tokens will write their, design the token based on the Ethereum platform. And
is that across the board? Yeah, so is Ethereum the baseline foundation of all of these different tokens that you see? Is this what you're saying, or are you just giving that example?
85%, I would say, or 80% of tokens that exist, and there's over 5,000 tokens globally. Wow. So that's how Ethereum makes money. So if you design the token, so you need the token based on the Ethereum blockchain. So they'll secure it for you. They'll send you the tokens. They'll do all that work, and you'll have to write it in their language. You'll pay them to upload the smart contracts, and it's not really cheap because they will cater. They will take care of the token for you. Anybody can design it, do a token. We can sit down tomorrow and have a, stay in your lane token.
So it's almost like
it's that easy. It's that easy.
I like
it's that easy.
It's almost like certain currencies are pegged to the US dollar. These tokens are pegged to the.
Not really, no. Tokens could be pegged on Bitcoin if you want. You choose. But I mean, it's designed to be on the Ethereum blockchain.
It's using
simply as that, but it's not pegged. Yeah, it's using that platform.
Yeah, but exactly. If Ethereum goes up and down, these tokens are affected.
No, it shouldn't be. No.
They should. Okay.
No, they're just using their foundation,
their language,
their technology.
Their ledger.
Yeah, exactly.
Yeah, their blockchain, pretty much.
Their blockchain.
They're just using their blockchain. Yeah.
Ethereum is coming out 2.0. What has changed? So what's the difference between the original version and where it is today? I know there's some efficiencies and whatever, but it would be good for us to understand on a very basic level.
I mean, based on speculation, there's nothing solid that's out. I mean, a few things are out that it's going to be, it's going to be proof of stake, but also it's going to be scalable. So I don't know how many megabytes a single block of Ethereum is, but if I'm not mistaken, it's either 8 or 11. All right, megabytes.
Okay.
So that means once a full block is mined, we move on to next block, right? So the possibility of making it a bit bigger, so it can handle more transactions. Hence, it could be cheaper as well. Mm-hmm. So there'll be less fees. If I send you Ethereum, I'll have to pay a certain percentage to the miner now.
Correct.
But in the future, I'll be probably paying less because this is good real estate, but it's going to be expensive. But if you increase it, I mean, it's going to be cheaper. You know what I mean? The less space, the more expensive, because everybody wants to put their smart contract on or the validated transaction on the blockchain. So it's going to be scalable. So, and the way it's going to be scalable, let's say in 10 years we need it to be 12 megabytes or 6 megabytes. We can kind of change it around. I don't want to get into technical details, but initially the way you should do it is going through a soft fork or a hard fork, which is pretty much this blockchain is going this way. Then you link it down to this way because you need to change a few things. So it's kind of another 1.2 version 1.3 blockchain. It's the same blockchain, but the features are different. And not a lot of people were happy with the transition, between how things took place when it converted to a newer blockchain.
Okay.
So now it's going to be very scalable and very naturally inspirated. So there's more transaction. It will change in dimensions in a way, let's say, to cater for the need at the moment.
So when they call it Ethereum 2.0, they're not changing that initial currency. So I own Ethereum. That Ethereum is still Ethereum. Nothing changes. It's just 2.0 basically is the foundation. The way that the transactions are done, the way that it's staked, that's what's changing, and that's why they're calling it 2.0.
Yes, exactly. And Ethereum's they come out with different versions. So we are on the latest version. iOWN is on Ethereum 2.2.3. It's called. So it's a newer language. The gas fees are less. So you require gas. I send with tokens. You require gas. So if I send you iOWN tokens, I'll have to send a small amount of Ethereum as gas. For the miners, because I'm using the Ethereum miners, right?
Correct.
They're not going to take iOWN. They only take Ethereum. So I'll have to send Ethereum along with my iOWN if I want to send you that. So the gas fees will be less as well. Transaction fees will be less. There's so many. I don't want to really talk about it until I'm 100% sure. But nobody in the world literally knows exactly. What date's coming out and what features, because anything could change. It's not finalized.
So okay, from your humble opinion, again, don't want to put you on the spot, right?
Yeah.
If you had $1,000 today, would you invest today in cryptos? Which crypto, or would you want to wait? Do you see some sort of event happening and you think that's a good time? I know you should never time markets, but just as a basic advice for the average audience member to kind of direct them from your experience. Again, we'll put the disclaimer out. Faisal just knows 100%. What he knows. You know what I mean?
Yeah.
But what would you recommend? Like how would you do?
Study, dedicate 15 minutes a day. The way I would say is, of course, you'll need tools to forecast, right? A lot of people hate graphs and looking at graphs, and last year and this year, it's kind of annoying, right? Especially if you're not in this field.
Yeah.
So the way I'll do it is, again, CoinMarketCap, learn about a few tokens. Then there's another website called CoinMarketCal, as in calendar, CAL.
Okay.
All right. So it's an announcement page. So they will say, next month, this date, for example, Litecoin. Let's just pick an example of Litecoin. Litecoin will be burning 20% of their tokens. So it's a burning event. So what happens? You're cutting the supply by 20%. Hence, Litecoin price will go up because of demand.
You're making it more scarce. You're making it more scarce.
Yeah.
Okay.
So I'll look at the way I'd forecast things is look at big events happening, like Ethereum 2.0 happening around July. Not sure, but just in case, I'll buy it now, a few months before at 200, hoping by end of the year it could go up to times 10. Possibly, it's happened before. Why wouldn't it happen again? When it happened for no reason. It was just everybody was just excited and on board, really.
At its peak, at its peak, Ethereum reached what? Some 300, right? 380, 400?
No, 1,350.
Wow.
January 13th, 1,350.
I think I had owned at that time, and I think that's when it was showing me making like 100% profitability. But like I said, for me, I always. I'm very long term. I'm a big believer in just kind of holding, sitting, and then when you see opportunities to buy in, right? And that's why I said now I'm seeing it I heard about the 2.0. I heard about this new proof of stake. So that's why I took a decision to invest a little bit more and kind of average out my prices. Always look to reduce your average price. And I don't know. So my feeling...
It's about news, really.
Of course. It's about
exciting news.
Emotional.
Buy early. And sorry also to interrupt, so I can just kind of close that part of the topic. So just research a few websites, look at exciting announcements that are going to come. Let's say, another big announcement is if you invested in a certain token and they say, we're going to release our own private wallet, that's news as well. So people tend to buy it because there's a specific wallet for it rather than using a third-party wallet. It shows that the company is actually working on things, to support this token. It's tough. So there's a lot of factors, of course, and forecasting. I mean, with forecasting, you design your own formula. That involves research,
Yeah.
Like I said, yeah. I mean, sorry, you were saying something.
Yeah, no, I wasn't necessarily saying anything. I was just saying, like, from what I've heard from you, if I'm to look at it,
you're saying. You're saying what for $1,000? Sorry, that was.
Yeah, exactly. So again, I was gonna come back to that point, because from what I've taken from it, I've heard one, Ethereum is coming out with a new. I don't want to sound like I'm pitching Ethereum, right? But I'm just saying the way that I analyze.
It's a good example.
The way I analyze information coming in, right? So information coming into me, there's a new version coming out. It's priced at $200, which seems to be a fair price. It seems to, from what we've understood from SIYL, it supports 85%. Let's say 70%. We say
of tokens
of tokens that are out there.
Yeah.
So it seems like it's here to stay. It's the second largest, isn't it, in terms of market cap?
Yeah.
Second
definitely.
largest in terms of market cap. Is that a good investment? Is that a good?
For sure.
For sure.
Yes, because I mean, we have big news coming up soon. I mean, it's the time. A lot of people said, "Oh, I missed Ethereum when it was $2." Back in the day.
Yeah.
So this is your other chance. A lot of people say, "I missed Bitcoin." I wish I could go back in time, 2010, and buy $100 worth of Bitcoin back in the day. So this is another opportunity for the people who missed the train. But with the $1,000, back to that, my advice is always, don't put your eggs all in one basket.
Of course.
Diversify your portfolio. It's really important with crypto. So with $1,000, I'll buy, let's say, $600 worth of the big two, Bitcoin and Ethereum. Yeah. At this current moment, it's Ethereum. Bitcoin's kind of, it's up, and so I'll buy the two coins, and I'll buy tokens. But the tokens need to have a story, a real utility, and you need to see at what phase they are. So a lot of them, start with ICOs, which was an issue, and people got scared because they got scammed. A lot of ICOs were scams, let's be honest. And that's why there's a new thing now called IEO, which is an initial exchange offering.
Sorry, I'm just gonna exactly, just to kind of touch on that. So ICO is initial coin offering, so almost like an IPO. Right. So just to kind of clarify for the average person.
Yeah.
Okay.
Yeah, and how they work is like buy it now, and either you can buy it for cheaper than the valuation. Let's say the valuation is $1, but with ICOs they have an option to buy it at 80 cents or buy it for $1 and get 15% extra tokens. Let's say, as a bonus, or 20%. So a lot of people lost a lot of money. Projects never, flourished.
Yeah.
So with IEO, you're not trusting the company or the token, or the token. Yeah. You trust the exchange, pretty much. So Binance, one of the biggest exchanges, or latoken.com, they have IEO projects listed there. So you're trusting the exchange, pretty much.
The exchange.
So the exchange does all the homework.
Okay.
Yeah, I mean, they'll validate everything. They'll have a Skype interview with you. I mean, they did it with us at iOWN. They'll make sure they'll need everything, all the information about you. Your LinkedIn hasn't been touched for a year. Yeah, there's a lot of requirements, So they validate everything, and they give you a score. If you pass the score, then they'll list your IEO. So you literally go to the exchange, either buy the token at an early stage with Ethereum or Bitcoin.
So they almost act like the SEC, right? They're almost
pretty
like
much,
That's a
the middle guys. Yeah.
Interesting.
So iOWN did really well last year. We were one of the top 5 IEOs.
So please,
last year.
We didn't give it enough space or enough time. Tell us about iOWN, right? I want to understand, what's the token? What space are you guys working in? Give it to us.
Yeah, I mean, exactly. So it's pretty much investments. Like I said, there's 3 types of crowdfunding. One of them is, we said, reward based. One of them is charities, and the other is equity based. So you literally own equity. Let's say if you want to open a restaurant, you'll need to put a deposit. We'll need to look at your history, pretty much, see if you qualify, how you've been doing for the last year. But you need funding, so you're willing to go 40% or 30% of your business.
Yeah.
So what we do is we take that business, of course, after reviewing it and qualifying it, we put it on an app, just on a phone or on our website, a platform soon to be launched called iOWN X. So the wallet, our wallet is currently out on both Android and Apple, but the platform will be out very soon. We're just waiting for a few, regulations to legalize everything, which is soon. It's in the pipeline. So we'll have these businesses listed who are seeking funds. So if somebody like you, we can go on the app and say, maybe this business will flourish in the future. Let me invest. So the only way to invest is through iOWN tokens. So currently, with our IEO, it was evaluated at 1 cent.
Okay.
A few months ago, we're live on exchanges at the moment, on 2 exchanges. You can buy iOWN tokens, and it's doing well. It's on 2 cents 23, so doubled in a bit in a few months.
Wow.
We're really happy about it, and that's without the product is not out.
It's not even launched
yet. There's a lot of believers.
Yeah.
It's not even launched yet, but they've seen the progress we've done. We are listed pretty much everywhere. To be listed on CoinMarketCap, remember the website we were talking about?
Yeah.
They need to qualify. It's not anybody can put their tokens there. So we have to fill up a form like no tomorrow. Wait a few weeks, and then we got approved. So that was a big milestone.
I'm obviously you guys have a website or a place where people can check on this, like to understand a little bit more.
Sure, iowntoken.com.
So we'll place that. We'll place that at the bottom on our YouTube channel. You'll see a link to their token, so you guys can get a little bit more information if you ever want to participate in it. Because I think it's really interesting. Like, if you have a business, you're looking to invest, especially in these challenging times, it's a different way to try to get that investment.
Yeah, and we're looking for businesses who are looking for funds as well. If anybody really wants to, raise funds for a business, or we're literally going to touch every single sector. So it could be real estate, medical care, environment. There's always a project for anyone to invest.
Cool.
So if anybody's looking to open up a business or has a startup and is looking for funds, drop us an email.
Check it out at the bottom. I think now, look, I just realized that we never did our Corona update, did we?
No, we didn't.
We kind of just left that. We usually do. Where are we at now with the numbers? And I think it's important.
As of today, which is...
Today is May 16th. Yeah.
We're at 4.6 million infected.
Wow.
And number of deaths is 309.
309,000. Because, yesterday, I'm just going to say something. I'm sorry, Faisal. I'm just going to go on my little bit COVID tangent for the day.
Yeah.
I keep... Guys, like I'm with you. I'm with you all the way in terms of opening up. I really feel you should, all of that. But when I keep hearing, and this is my own personal opinion, guys, so don't confuse it with anything else.
Master opinion.
Yeah, from my Masters of Health Policy from Imperial College, with that master's. But no, seriously, like when people are trying to say that and still trying to categorize it in a level of the flu, it's just wild. Like, come on, guys, like don't. It just doesn't make sense. And I was saying that I just was looking at some statistics, and we're talking about the US CDC records around influenza in 2018, 2019. 35 million people got infected with influenza. 35,000 people passed away. And now you're talking the US numbers is about, what do we say, about 1.8 million, I think, infected, and about 85,000 deaths. And this is only in a couple of months. So please, it's
not like the flu.
It's not like the flu. If that's what you think, it is not. You know what I mean? If you want to make an argument about opening up the economy, please do. But please keep that information going out in a sensible way. You know what I mean? I think it's really important that people constantly talk about this in a realistic way. It just doesn't make sense. So I had to say that. Faisal, thank you so much for joining us. Really, really appreciate it. It was really
Thanks for having me, man.
It was awesome. Thanks
for having me, guys. Yeah.
Thank you for joining us on this episode of Stay in Your Lane. Please subscribe, like the video. Any sort of questions that you guys have, even if it's questions around the cryptos, please put it in. We'll get Faisal to respond. We'll get him working for us as well. You know what I mean? And look forward to the next one. Next show, we have another really interesting person coming on, Heimo, who works in security. He's a former Austrian Special Forces. super interesting person. He's going to tell us how things have changed with the COVID days and how corporates are kind of working around that. So look forward to seeing you guys again. Take care.
See you, Faisal.
See you, brother.
See you guys. Thanks for having me.
Thank you.
Bye.